Hi, Warriors. Let's have a good week. How's everyone doing? Alexander, Shahab, Ingmar, Bran, team.
Hey, Dale.
Hey,
Good morning,
Brian.
Dale.
How are you, Blake, Ryan? So here we are with the Dixie, trying to hold the lows. I still think that it wants to panic under par, but I really don't know what to do. I still think there's more left in Euro. Pounds diverging up here. I thought we'd get to 127. It's almost there. So I don't know, if the pound is topping, it's, I'm conflicted that we could still get up towards 112 in Euro, but I'm going to be patient. Ryan, what do you think of the action? We're coming off a little bit. We were about 30, 40 pips higher in cable and Euro. US session selling into the rally. What do you think?
Yeah, seeing a little bit of a pickup in yields as the US comes to town. That's what really needs monitoring. We're seeing across the US yield space things ticking up. That's pulling dollar yen up and putting a bit of pressure on cable and the Euro. The Euro just, it seems like it's in one of its moods where it doesn't know where it wants to go. It's been up and down for all the central banks, ECB, Fed, data, NFP, and it's pretty much where it was where we started almost the beginning of last week. So it's just not knowing where it wants to go. But yields, I think, are the driver. And again, looking at that chart here, the 10-year, it's going sideways. It's decent enough volatility there, but it's going sideways for now. And
over 360, it'll look like it can extend.
Yeah,
I don't know, maybe 380.
But I'd ask the question, if it's not up at 360, even while the Feds just continue to hike and maybe got one or two more left in them, how is it going to get above 360?
Yeah. Okay.
But what you're seeing though, what's important with yields, and we saw it, is that this debt stuff is having a real knock on the front end. You look at 1 month, 3 month yields.
Yeah,
that's where the default is really showing. So maybe people are getting out of the short-term stuff, because if the US is going to default, it's going to be over the next month or so. You don't want to be in 1 month paper, 3 month paper. So you get out of that and you get into the long end.
Yeah, although we know that the US is not going to default.
Yeah. But it hasn't stopped 1 month yields going over 5%.
No,
well,
it makes sense.
I mean, money disagrees with you, Steve, that there's at least a fear. There's a big premium in even 30-day bills. People don't even want to own 90. All right, you're getting paid more. 90-day bills used to be like the king of safety.
It makes sense. There is a theoretical risk. Practically, do you believe that they're going to default?
No, but I think they'll be. We'll
do,
go
do
past
you know?
the deadline.
Do you know why I'm 100% certain that they're not going to default?
I'd like to. Yeah, we all want to know.
Because that would be the right thing to do.
Okay, the right thing.
So there's no way they're going to do it.
Okay. All right. You have definitely haven't heard that opinion before, so that's unique. The right thing for the U.S. to do is to default, and for what reason?
I don't mean it so much directly.
Anyway?
I don't mean it so much directly, because if you get to the point that you actually are going to default, you're going to have to do what you haven't been doing for many years, and that doesn't apply only to the US, right? I want to be fair, is to have to face the music. And the solution is not to keep expanding and extending the spending limit. It's to say that, listen, we cannot keep spending like that for eternity. It's a matter of time when there's going to be a huge problem with it. And instead of waiting to find out when we're going to have to face the music, and the more you wait, the worse it's going to be, I'm going to balance the budget at the very least. Right.
Right.
And if you balance the budget,
Yeah, there'll be no social security checks going out and everything else. Government.
Okay, so we can of course follow the dishonest solution, which is everybody gets their social security, but the money they get for social security doesn't have any real value at some point, right? Yeah. So you do get the money, like in Venezuela, they got their bolivars and they had to carry it in luggages, right? But the bolivars had no value. Of course, the US is nowhere near that, right? There's no question about it. I'm not saying that the US is about to have a hyperinflation problem or whatever, because it's still, the US dollar is still the world reserve currency. But no matter all the benefits of being in US dollar and having the world reserve currency, at some point, you're going to have to face the problem, which instead of trying to make it better, we make it worse year by year. That's the truth, right? So at some point, at the very least, you don't need to actually default. What you need to do is say that.
Lost you.
Oh, the internet didn't like that.
Huh?
He's telling it like it is. So
yeah, the government are listening. They've cut him off. Steve defaulted. Yeah, that's right, Gavin. Steve defaulted and they cut him off. See, that's what you get.
Must be an American in control of Steve's internet.
His internet just that seriously went down. Stelios, you want to continue that?
Nope. But I have to say, I don't think the US will default. I mean, that's out of the question. There's no reason for them to default.
I was going to say, since we're on this conversation, I believe McCarthy and Biden are meeting tomorrow. Is that correct, Dale?
Yeah.
Yeah. And so there's a lot of talk right now that the debt ceiling could be pushed back. This whole debate they're just going to basically pave everything over until September 1st. That's a big talking point right now. And therefore, stocks are, positively responding over the weekend. You're seeing, everything kind of bid up over the weekend. And it's not because of the king. It's not because, the coronation, but Ryan.
Oh, I thought you meant Elvis.
Yeah, no, Ryan, you guys partied over there, right?
Yeah, we had a big old party yesterday, street party. I'm feeling it this morning or this afternoon.
Were you wearing a crown while you were hitting the kegger?
Not quite a crown. I was wearing a Union Jack motor.
Nice. K-Man, how are you today, man?
Oh, he's not in. He's probably suffering as well.
Oh, okay. He was at a party. Was he at your?
It's a UK holiday here.
I was going to say it's a UK holiday. I'm surprised. I'm surprised you're here, Ryan.
Yeah,
but we appreciate you being here.
Yeah. I thought I'll pop in and make sure everything's still working. And obviously it's not, because Steve's been cut off from the internet.
Yeah. So no. My Zoom crashed for some reason. Never happened.
No, that's the government, mate. You were slacking off.
Just the application crashed.
No, it was a censor. The Americans.
Tinfoil hat stuff.
Some American was controlling your Zoom, man.
Yeah.
Anyway,
is this really you, Steve?
Ask me a personal question.
It's a family show.
Ask me how many times I've seen Stelios naked, for example.
Oh, come on, dude. Seriously.
Oh, wow.
No.
In grade
school?
It's
definitely Steve.
I apologize to all our listeners. I apologize.
What about U.S. dollar yen here, guys? And, we had that big break last week. Is this just a bounce to sell into? Almost 138, 34, maybe around 36. Anyone looking for sales in U.S. dollar yen, even though yields are up today?
Well, I'm still short. I was looking to maybe see the move continue down, but I did think it might have been running into trouble when, as we said last week, you get, 1 minute it's looking extremely bearish, then you get the NFP, and all of a sudden it's a change around. So I think we're continuing to range. That 138 is going to still be very important. It was important for that last test up there. It's going to be important again. But I think, if it gets and holds above 135, I wouldn't be surprised to see us run up towards that high again.
Last week was kind of crazy for USD yen. We had like a 400 pip rally within a couple of days, and then within 2.5 days we gave all of it back.
Yep.
Thanks, BOJ.
Yeah.
But
why don't we get to risk, Blake? Because you were bringing it up how, you know, they're going to paper over this deal to September.
yeah, I mean, I think that's the near term risk to the upside in the markets. I mean, you know, you look at the
4,200 going to give way this week.
Yeah, I mean, it sure does feel that way. I mean, the pullbacks have been limited to a 38% retracement, which is at 40.44. Yeah, 40.45. I mean, at whatever number you're looking at, it's right there. And so with a shallow retracement, you got a lot of people leaning into it. The sell and may go away crowd is leaning into it, and all you need is a deal, and then, you know, or even a can kicking till September. We'll put the S&P into new highs. You know, we'll trade above 4,200.
And I hear they're buying all the battered banks today are up sharply in pre-market. You know, the region.
Warren Buffett is selling all banks, though.
Well, I'm just saying they're popping pretty good. Everyone's buying them today, and maybe that's the reason.
Let's see if they're going to become the next meme stock kind of thing. You know what I mean? You remember we had a couple of years ago, we had that, groups of people buying things that were like hugely oversold. Let's see if, smaller banks, regional banks are going to become the new meme stocks.
Okay. I read an article that we have about 2,200 banks here in the US, and that half of them are insolvent because of their books. And one other thing to keep an eye on is that
extremely likely.
I also read that JP Morgan has such a huge hypothecated short gold position that a big move to the upside could bust them. So, it's mainly that these banks became not banks, they were trading houses. Okay. They became, just a play. They were specking, and it shouldn't be a surprise. Here's what came to mind this weekend. So I remember Sheila Bair, before they embarked on the tightening cycle, saying that they better be careful and do it slowly because of all the leverage in the system. So do you think that Jay Powell didn't know what Sheila Bair knew? Do you think that Jay Powell didn't know that the banks were all loaded up with long bonds? They know who the buyers and sellers are of treasuries. They're one of the biggest participants. So it makes me think, I know you guys are going to call me a conspiracy guy, that this is almost intentional, because if we take down all the banks and leave a few big ones standing, and we are going to a CBDC, and that's not from the Treasury, because it's called central bank digital currency, that the Fed and a few other of their partners, big partners, gain more power, and taking down the banking system is going to make the Fed more powerful, especially after implementing CBDC.
Well, the
so
question,
I mean, go ahead.
Sorry, go on.
Am I crazy, Blake? I mean, am I crazy, Stel?
You're not, because who is the main stakeholder of the Fed? Who's the owner of the Fed? If you Google it, or if you research it, you'll find it's the major banks. So it's a tricky situation. If you look at what's happened over the past month or so, who's the big winner over the whole banking crisis so far?
Right.
Bank of America and the Wells Fargo, they've had inflow of deposits, which they haven't seen in years and years. So, it makes you think, tinfoil hat or not, buddy. It makes you think. Yeah.
Yeah.
You're absolutely right.
So anyway, because, Jay Powell, he's a very intelligent guy.
Of course.
And I can't believe that he didn't know. They talked about, well, they'll tighten until something breaks. Well, something broke, and he still tightened again. So, that makes me think it's not incompetence, it's intentional. That's where I stand. And it kind of pisses me off. because you know we're just like little fish being pushed around by some big game plan to change our monetary system, change our whole financial system.
Dale, don't hate the player, just hate the game.
Okay. Well, all right.
Just
anyway,
but no, the fact is that I mean, you know, the Fed is going to the Fed has mandates, and whether they decided they wanted to do they knew or not, or you know, I would assume they knew there was going to be casualties.
Oh,
and
yeah.
I mean, it's part of the wrecking ball of the monetary system that's taking place right now.
But they know there were already casualties, and he went again. He went that other quarter. Why?
What casualties, Dale? Who's lost money?
Yeah, right.
Okay.
The bondholders,
aside from the bank
bondholders and the stockholders have lost money. They have lost everything.
Who cares?
That's the risk. But your man on the street who's got deposits has lost nothing.
Right.
Yeah. So that was the end of the bail-in policy, at least for now, because that was going to be the policy. They weren't going to bail banks. So now we know that they will in certain circumstances. Anyway, I just think that, you know, no one's talking CBDC, any of the mainstream guys. I ask everyone about it, what they think about it, and I can't get really solid answers about it. Oh, I hope it does, you know, I hope there's some pushback, but I think it's the biggest monetary story maybe in US history.
There is a methodical, slow move towards that, and I think unfortunately it's inescapable. They're not in a rush to do it. They push the plan slowly. They've been pushing it since, you know, for roughly 10 years now.
I'm seeing ads on TV for it. Okay, they show an advertisement where the dollar's so inefficient, and they show, you know, crinkly old dollar bill, and then
you see commercials on this
coin. Yeah,
really?
A new dollar coin on TV. They're pushing that, you know, this is the old way. This way is going to be better, and it's the US dollar coin. Okay, I'm seeing ads on television for it.
I don't know.
Well,
I doubt that central banks are putting advertisements on TV for.
Who's doing it?
I don't know.
I haven't seen it to have an opinion. Obviously,
right, well,
we wouldn't be playing in Greece, but
maybe Google commercials about the US dollar coin.
Well, anyway, you want to speak a little bit about crypto, since you're on the topic of.
Oh yeah, Binance. Yeah, it's same. Yeah.
Well, you're seeing Bitcoin roll over after it tried to break out to the upside. You know, this is one of those charts that actually makes me believe that you know there is and then that there is going to be a little bit of relief for the banking sector, because if you look at like KRE,
right. Okay, that's
KRE is moving higher this morning. You can see pre-market it's up a little bit. I think somebody made mention.
That's an island.
Mike, what's that?
That's an island.
Yeah, a little island reversal. You know.
No, Ziggy, I won't. Ziggy
wants
me to. Ziggy is giving me advice, and I said no.
Anyway, hey Ziggy, good morning. So we've got a little bit of reversal on the banks, and that's I think is one of the things that has some downside pressure on some of these cryptos. You see Bitcoin, you know, false breakout, probably challenge the 50 DMA here, maybe even move a little bit lower. You know, and we'll get some risk on a couple other things that are happening. I know you guys talked a little bit about, you know, the yen. I mean, Dale, you were asking like what's the yen doing here? I mean, we're at the 38% retracement, but we're just managing through this channel. I mean, if you look at some of the other yen pairs, like one that actually stopped me out overnight was actually the New Zealand yen. I was short this coming up into these highs and then pushed right through the highs, and because you can see the long-term 618 retracement was there, so pushed through that. But I mean, I would look at the dollar yen and think that we might be able to recover a little bit with yields going higher. You know, you got, like I said, the yields right here pushing higher this morning. I think Ryan, you were talking a little bit about that. It does feel like that the dollar yen might push up a little higher as a result, right?
Yeah, I think that's possible. It's going to follow yields. We've come through all the meetings, all the data. it's just going to, for lack of input from anywhere else, it's going to follow yield. So do what they do. And if I think we get a stopgap kick on this debt stuff, it's probably going to bring a bit of a risk rally as well, and we see yields higher and dollar yen higher.
Yeah. So Ryan, you're I mean, it's obviously a UK holiday over there today. What are you looking at this week? You guys didn't have the flow show today, right?
No, flow show's back on tomorrow.
Okay. All right. So what's on your radar for the week?
For the week, it's going to be a little bit of a quiet week because of usually always is after the NFP week. It's usually a very busy week, but we got US CPI on Wednesday, so that's obviously going to be the big kicker, the big piece of data this week, because everyone's going to want to know whether Fed right to say what they said. Is it a pause, or is inflation going to show that they need to keep going?
Oh, and I do have an answer for Ryan, who's losing money. Ben Maldonado just Skyped me and said, the little guy is losing money. They're getting killed by inflation. So that's who's losing money.
That's a true statement.
In a roundabout way, but that's not through the banking.
Oh, sure. It's better to, people will know when they're pickpocketed.
When isn't the little man losing money in that sort of circumstance?
In 900 BC.
Yeah, since gold was currency.
Yeah.
And Mike asked about the euro US dollar. I mean, I just feel that we're trapped up against these highs. You can see we're smack dab in the middle of this range. This is a range we've been looking at for like, I don't know, like literally like the last week and a half, and we're just kind of stuck in the middle of it. So I think this, the CPI data, as you pointed out, Ryan, might be what drives the dollar out of this breakout point. And you can see the dollar index is just kind of stuck near its lows. So I want to ask you guys this. Ryan, you're looking at CPI. Stelios, how do you feel about the dollar here? Do you think the dollar is going to actually break down following inflation data this week? What are your thoughts?
Well, we're getting very close to the 100 spot 80 lows. And it's getting more, the more we linger around here, I've said it for days, for a couple of weeks now, the more we linger, the more I think it's probable that we're going to break down. Do I think CPI is going to disappoint? Most likely. So I think this week could be the breakdown. Yeah,
everybody feels that like the inflation cycle is over, and we're going to have some deflationary type of some deflationary type of pressures moving forward.
That would be great. But I don't know if we're going to have them. It would be
purely technical speaking, this recent price action in the dollar looks like a bearish consolidation. Nothing in the attempts of a rebound have really shown bulls to have the ability to push the index higher.
Yeah, I mean, I agree with you, Steve. Steve, putting on your economist hat, how do you feel about do you think inflation is going to be sticky and it's going to stick around and we're going to continue to deal with this, or are we heading into some sort of deflationary period for the global economy? What are your thoughts?
I think that inflation in general is going to remain strong, but we have to put it in the context of what economic activity does. Meaning, obviously, if we go into a recession, inflation will recede faster. Now, the important question is, though, do I believe that inflation is going to land back within the reported 1 to 2% zone? I think that even that if that happens, it will be only during a period of a strong recession. Otherwise, I think that inflation is going to remain higher than what we've had for many years, and for much longer likely than people assume.
Yeah, it's going to be. I mean, I hear people saying that, and as Stelio said, I hope the other way around is it happens. So we hope for some deflationary type of pressures. It would be nice, but as a human living in today's world, but I don't know if that's going to be the case either. But look at the dollar. I mean, this week's print, for CPI, the market is looking for. Let's just go ahead and make sure we know these numbers right off the top. And by the way, we will be covering these live. Year over year, you think 5.5% is lofty? I mean, I think it could come in closer to 5%. What are you guys thinking here? Like, that's core, obviously. Then we have, the actual CPI. They're expecting a 5%. It can come in at a 4 handle, right? That could be enough to drive the dollar below those lows. What do you think, Stel? Or Ryan, go ahead.
Sorry, no, go, Stel, if you want to chip in.
No, I agree. And remember, we're seeing oil prices drop. Of course, it takes a few months. It's a lagging thing that to come through to inflation. But the trend has been for inflation, at least in the US, to be underwhelming compared to the estimates. So yeah, I think we could get a 4 handle. Core is a bit more sticky, but but as I've said before, even if we get to 2 or 3%, it doesn't mean that things are back to normal. We need to see negative inflation. We need to see deflation for prices to go back to roughly where they were. I mean, remember, we had a huge bounce in prices over the past, about 12 months ago. It started, or a bit over 12 months ago. This has to be reversed, not the pace of this slowly.
About it.
I know. But anyway, they're going to be celebrating if we go back to 2%. My God, mission accomplished. We are the best. No, you're not. This is not good. But yeah, to answer your question, Blake, I think the chances are still for a lower than expected reading. That I remain of that view, and that's been the case for the past 6 months or so. So I still think this is going to be the case.
Interesting. Well, Sa says, what about the euro buyers will start to take profits since the euro bubble is about to burst? What is the euro bubble? Explain to me what a euro bubble is, other than the 5-kilometer radius Steve lives in Athens. What euro bubble are we dealing with? Do you guys know about the euro bubble?
I'm smelling a euro bear.
Yeah. I think you're a euro bear, just hoping that the euro rolls over. But I want to point out that the euro is extremely strong. And why, if I was a bull and I owned euros, why would I sell them here? I mean, there's absolutely no reason for me to do so. We've broken, descending trend lines. We've held gains. We're above 50% retracement. It looks like 112 is just a matter of time. It's like we're marking time until we get there. Do you guys have any thoughts on the euro dollar and where it should go?
I think it's still going higher.
Yeah, I mean,
I think the path of least resistance is higher euro dollar, higher stocks.
Yeah,
maybe not a lot of sense in the stocks, but that's how it is.
How are cable bears feeling right now? We just forged out a new trend high today. Now, I'm not saying that you should be chasing it up there. What's that?
How's Dick Matthews? Still looking for a top here?
He's been pretty constructive on the cable over the last couple of weeks.
That's changed.
He just said, if you can't beat him, join him, right?
Yeah, that's what you do. Sometimes you have to be the wrong way to know to get to be the right way.
Sometimes the market forces your hand into saying, you know what, screw it, I got to go with the flow here. You're right. Hey, real quick, I know we got just a couple of minutes. Let me see. Do we have any data coming out at this time?
Not really, no.
What's that?
No.
Nope.
We do not. Okay. And remember, it is a UK holiday. Did people run around, and I have to ask this as an American, did people run around saying like "Long live the King" yesterday?
Yes.
They did. Okay. So that's a thing.
We all stood up, toasted the king. Yeah, and sung the national anthem. Yeah,
that's awesome. That's really, it's cool. I mean, as an American, we do that for our presidents all the time. Just kidding.
And some of our presidents
we really don't.
And we've had presidents that think they're king.
Yeah. Oh, yep. This is true. That's been the way.
Anyway.
Anyway, let's not get into this conversation. Hey,
I guess
I'm all for monarchy. You make me the monarch.
Wait, real quick. Let's go around the horn. Dale, what's your best idea for today? What are you going to do today?
I'm not doing anything.
Okay. Steve,
I'd like to see 112 euro to, around there to start building euro shorts. I've been waiting
we got
for
some,
2 weeks, 3 weeks for this to happen already.
Yeah, we got some time to get up to that 618. What do you think, Steve? You have any good ideas for today? We're gonna be passing it over after we go around the horn here.
I can't promote Chris.
You can promote him.
Well,
You've probably already
doesn't-
done so, but he
No.
also needs to accept from his side. Trust me, we've had this
There,
conversation.
okay, it's done. Okay,
Yeah,
thank
you
you,
see.
Steve. Yeah.
I
Steve,
didn't do anything.
Any good ideas, trade ideas for today?
I have one.
Trade ideas for today specifically. Aussie is coming. Okay, if you want like short-term stuff, which isn't my stuff, but Aussie is coming near resistance soon.
Yeah.
I mean, roughly at 68, 68.20. We have resistance. So I think that Aussie might be done for the day. We might even see a pullback since you're looking for short-term ideas. I also think that crude oil is approaching the 50% fib. It has made a
double bottom there, Steve.
Yeah, it has made a magnificent recovery from Thursday's lows to today. Might also be due for a little bit of a pullback here. So yeah, if you want shorter term ideas, these are things I'm looking at.
It gaps up and then takes a low out and then starts heading higher. Every bull and bear is up.
Asian action. I gotta love that, and like low liquidity. Hey, Stelios, how about you? Any big ideas for today?
Yeah, Euro pound is very close to the lows. I think very nice risk reward long here with a stop about below 87.1 or something like that. 87.10, sorry.
Don't cheat my trade.
Is that what you've got? Okay. Yeah.
You're copying.
Very nice risk reward. And, it's tested that level a few times. Maybe it's going to go one more time. I don't know.
So Ryan, you like this one too?
Yeah. I got in on Friday and I didn't see that rally we had this morning. I might have taken some off, but yeah, I put on some more to my position.
Awesome. All right. Well, guys, I'm going to bring up the dollar Mexican peso, and then Dale, I know you got the
break you wanted, man, right there.
Yeah. Well, here's the thing. I think the 161% extension is pretty big. I'm going to try to be a buyer down here if we hit new lows. But the thing is, we're getting a reaction this morning for no reason. I mean, you just have probably some buyers coming in, at these levels. I don't want to get too aggressive down here, but I think if we can trade down to 1772, I'm going to be picking up some. So I already picked up a little bit this morning. If you're in the trades room, you already know that. But I mean, I want to be a little bit more aggressive down here if we hit new lows. Or we break back above 18, then you got to just treat it as a false breakdown. All right, guys. Hey, I want to say thanks everybody for being here today. Make sure you check out our community and the ForexAnalytix community. And Dale, I'm going to pass it to you so you can do your interview.
All right. Thank you, Blake and team. Great way to start the week. Some pretty good discussions and ideas that could be actionable. And at this time, I want to welcome back Christopher Inks. How are you, Chris?
Hey, Dale, I'm doing great. How about yourself?
Good. You made some nice calls. You were bullish everything last time we talked, except the dollar.
Yeah.
Do you believe this, Chris, that if you get the dollar right, you get the rest of the market right?
I think you're. It's hard to get it wrong.
Yeah.
I mean, obviously, everything doesn't work. Doesn't move just opposite at the exact same time. But I think if you get the general direction of the dollar right, I think most everything for the most part kind of comes out the other way. Yeah.
Okay. You want to share your screen? Instead of me asking what's top of mind, I know you're bullish Bitcoin from lower levels. I don't know, 20 or lower, and we're having this big break here. Has anything changed for you in Bitcoin? You want to start with the dollar? Go ahead.
We can talk to Bitcoin here real quick. I've got a chart.
All right.
Yeah, I mean, Bitcoin's this thing that I've been talking about since we had that capitulation last June,
Right.
And then we had this FTX nonsense that happened here in November. but using Wyckoff, I mean, this all looks very, very much like a accumulation in this whole area here. A lot of people mistakenly just say the very low is the accumulation, but it actually starts back here in June. This is what happened in November, would just be what we call a terminal shakeout. And that's the goal there is basically just to get the last of the last holders that are going to sell out. And you do that so that you get this kind of movement coming in that we had in January and again over here in March. And so right now we've been holding up here, above 26.5 since back here in, what is that, March, almost 2 months now. And so this is good. This is something that we want to see. We're getting held up right by the congestion that we had over here back in May of last year. But this kind of pullback that we're looking at here is what we call back up the edge of the creek, which just basically means a pullback towards supply to retest it as support. And, the expectation is that we should rally up more than anything else.
Okay.
Now, if it continues down lower, we can look at 25.
Yeah. Okay. That's fine. So if we take out that low, you're looking at, are your support levels, fib levels?
Well, actually, it has more to do with just the structure here.
Okay.
What we're looking at. So,
all right.
Yeah.
So maybe 25 if we take out the low from a few weeks ago. Potentially,
but I'll tell you what, man. Everybody has really, really been looking for that 25 for a while. So you've been doing this a long time too, and when everybody's looking for it, often we don't get it, right? So
or it melts through it.
Yeah, exactly. It just does not, get there and stay there or whatever. So yeah.
Okay. All right. So still constructive there. You went to the dollar. You have any downside targets? You've been bearish since the highs, man.
Yeah. And last time we talked, and we had a bit of a bounce there. Nothing special. Again, we have that weekly pivot here. As I was talking to you last time, that's kind of like my real kind of major resistance area. And we had the first breakup through there back in January, and we pulled down and then bounced back up just slightly bit higher there in March. But again, got rejected, sent back down to a slightly new lower low.
I see a V at about 99.54. So you think we're about to complete this first wave down?
I think there's a good chance of that. I've got actually two targets here. Initially, it's the 99.54, and then if it continues going, we'll look at 97.68.
Okay.
But yeah, I think we're probably just about to finish it up there. And here's the thing: if we do hit just this initial target and get that reversal off there, excuse me. Let me see here. So this gives us then, when we're doing Elliott wave, it gives us 5 waves down. So that would be, a wave 1 or a wave A. But we usually look for that first pullback, that wave 2 to target wave 4, the lesser degree.
Right.
And, so that potentially gets us right up here in this low volume node, right around, 105.8, somewhere right there. So I think it's possible we could see that, if it happens to push on through that weekly pivot, just again, getting just, knocked out right at this same.
Because I mean, you have to feel a little uncomfortable being a dollar bear down here because Chris, I don't know about you, but I've never heard or read so much about de-dollarization in my entire career. And I mean, and that talk's been going on for decades about losing reserve currency status, But, guys on the street, I bet people, and let me ask you, people who aren't in the business, have any of them asked you about what's wrong with the dollar or what should I do about the dollar?
It's funny, rather than ask questions, I think everybody's just kind of jumping on this whole, it's the end of the dollar thing. But like you said, it's the same thing we're getting, every 10 years or so. There's been this romanticization of the death of the dollar since Bretton Woods, and
it's Lazarus, it's risen from the dead. I don't know how many times. So anyway, I find it very interesting. You have a V there at that level, because that's what I've been talking about for, I don't know, about 3 weeks, which will give us about a 112 euro, which I think is a decent sell zone. So really appreciate you having that V up there. It gives me more conviction about trying it should it get there.
Yeah, it's exactly, the kind of thing I'm looking at there. And so, I mean, anything can happen, but right now if we lose this support here, those are the two levels I'm looking at right now.
Wouldn't you think that would, whatever has been going up would be, kind of propel risk, and that should 5 hold and start turning up, could be about maybe risk off?
Yeah, and it aligns with a lot of other charts I've got here. It kind of aligns with what I'm looking at with silver, with gold. Oil's already kind of doing this. It looks like it's probably doing this reversal. So yeah, I mean, in general, yeah, exactly.
Okay. So you were also constructive S&P?
Yes.
Still so, and are you're still in the melt up camp, with, even though banks are, they're being bid up today, but I read an article that half of our banks in the US are insolvent.
Yeah, they're insolvent if people run on them, right? I mean, isn't that the way it is? It's not that, okay, well, like they're going to go under today with nothing happening. It's you need all those kind of people running on them. You need the high interest rates to stay, so they're paying more on that on those bonds. I don't know, man. When it comes to
I heard it, it's not only deposits leaving, but it's their books. They were there was a lot of malinvestment.
Yeah.
With ZERP, right? And so they were all pushed out on the risk curve. And
yeah,
so
go ahead.
Go ahead. No, go ahead.
Yeah, no, I was just going to say, we had all those years, coming out of the GFC there, where, it's just been the secular bull market running up, and the Fed was just dying to even get 2%. We went to those mild little short deflationary periods around 2015. And again, I believe it was 2019. So, the banks they're doing what they're doing. They're going to fall into, they're going to be comfortable, and everything's low rates, and, they're going to do what they're going to do. And then they get caught when the Fed just does this nastiness that it's done, starting last summer. So, yeah, I mean,
could I put a question to you that's outside of, like looking at a chart?
Yeah.
Don't you think Paul knew that the banks were all, levered up long bonds from Civil War level interest rates?
Oh yeah. A lot of it's real cool. It's real whatever online today to say, oh, Powell's an idiot, and I don't think he's an idiot at all. I don't think the Fed is a bunch of idiots. They've got very, very intelligent people.
Yeah.
They know what they're doing.
Okay, so isn't this intent? So everyone said that they were going to tighten until something broke, right? Well, something broke, right? And he still went ahead and tightened another quarter. To me, it's starting to look intentional. Could it be that the Fed actually has a vested interest, and the big banks have a vested interest in taking this down, so they become the bank after all? Isn't the digital currency have a C at the front of it for central bank digital currency? Why aren't digital currencies coming from the treasury like our currency has for centuries?
Yeah.
Why isn't it the treasury digital currency? That it's a central bank.
Yeah. It's
you ever think about that?
Sometimes what I try not to do.
You just want to make money, who cares? Just make money, and but I know you're a thoughtful guy. So do you ever think about these things, that maybe this whole thing is just, a plan?
Yeah, I mean, obviously anything's possible, especially when it comes with the government, right? I mean, we know that historically the government does what it does, and everything's are conspiracy theories until they aren't anymore, right?
Yeah.
And just with power, with the nature of power being what it is, I mean, it obviously wouldn't surprise me. But at the end of the day, I really just try not to do a whole lot of thought on it. I just try to make money while I can.
Yeah, I know what you mean.
You're
better off. Because
I mean, what are we going to do? It's not like we're going to stop.
You could end up with like an ulcer, like
yeah,
me.
yeah.
Anyway, you're right to just ignore it. I wish I could, and I wish I could just bury my head in the sand, but I can't. It's the business I'm in. All right, so S&P's 4,200, big area forever. You think it's going to be a breakout, or could we just have I know some people that are talking about 4,300 could terminate this rally. You disagree with that?
So my whole thing is, I've told you before, is this mid-August swing high, and that's across all charts. That was Bitcoin. That was the big level I think that I felt we needed to get through. The Dow's already been up through this level, and we're just waiting for the NASDAQ and the S&P to do it now. But, here that's at 43.2750 area. Yeah. And, for me, it looks like an ABC down, which would suggest that this is at least a wave 4 here. Yeah. Again, which means we could pop up, but wave 4 can take so many different ways. We can have an ABC back up to the all-time high, 5 waves back down to the low, and then break out, or we can build a triangle here, Yeah. So this is, if this was a triangle, this, it would just be A, we're working on B, we'd still have C, D, and E to go. This thing could go sideways for months.
Okay.
And I think, something like that, I think would be like a lot more painful, I think, for people, because everybody's been fighting it since the lows here, right? Everybody's been fighting the rally up, whether it's Bitcoin or whether it's stocks. It just seems like everybody's just been fighting it up there. Oh, we got to go in recession. We got to go in recession. They've been talking about it for a year and a half. And even if it comes true, the problem is we don't know when that's going to happen, right? We always talk about how the markets can stay rational longer than you can stay liquid. And so, it becomes, okay, so people sit here and they fight it and it's going up without them. And then it does this sideways thing. So then they start thinking, okay, well, it's going to come back down, so I'm not going to get interested. And then it goes up higher, and then they get scared again. And, and they don't end up getting in until you're getting near that all-time high again. And usually that's where you get kicked back. So, I don't see this any different any other time that we pull back. People just, they tend to continue to be bearish until you're kind of getting up near that all-time high again, or you're getting to the breakout level, and then they go, okay, maybe. You have some traders, that are trading this up, like myself, and I'm sure probably you and some others, but for the most part, retail in general just ends up being scared, and then they become paralyzed because they can't figure out that, they were promised it was going to go lower and it hasn't gone lower yet.
Yeah. Okay. Valid. Possibility, a lot of possibilities. You have clarity in the metals here, Chris?
Let's see here. Whoops. Jump that back over. Yeah. So if we're looking at gold, remember I was bearish on gold, which actually served me well. We had a couple of great drops there, but the rally in here is what changed my mind. And so this has always been the alternate count. If we didn't get the breakdown, was the idea that we had a 3 and a 4 here. So based on the height of wave 4 here, we have a minimum wave 5 up there at 2380. But we could see this overextending to 2780, even depending on that here. If I'm looking right here, we're probably getting close to a reversal to pull back down toward this weekly pivot at around 1843 or so.
Okay.
But that's all I would expect. And again, it's a high volume node right there as well. So,
okay.
If we haven't topped out just yet here, it's probably just a little bit higher, and then we'll pull on back there.
So it'll pull back with the dollar turn. So it all kind of points towards the dollar completing and having a bear market rally that creates corrections and risk.
Yeah,
right?
Exactly. We came close to that all-time high with gold here in the futures market the other day, last week. And
in Asia, we took it out. In Asia, we took it out on my platform and showed a high of 2080.
Yeah, see, so we're right there, and that opens it up, after it pulls back.
Okay.
And then silver, let me see here. Again, along lines with that, same thing with silver. It became constructive off these lows here, and so I kind of changed the idea of what I was looking at. And so, potentially looking at a 1-2 here. So 1 being back up here in February of 21, and then 2 ending down here in August of 22. And so again, either we're at it or getting pretty close to that, to this rally up off that low. And then again, we'll pull back toward the weekly pivot right around $23, is what my expectation would be. And then to rally up higher.
Rocket. Yep.
Yeah. If we do get rejected right here, instead of heading up a bit higher toward the R1 pivot on the weekly, which is right around 28.64. If we get rejected here instead, then, it's possible we can head on down here to this wave 4, this low volume node area, and get popped up out of there right around $20.25.
Boy, I'd love that.
Yeah, great reload area.
Back up the truck there. Do you have any views or biases or technical picture that gives you, an edge in forecasting where yields are going? Because in TLT, I have this big triangle that it looks like it could come out of either way. So I'm wondering what you're thinking about yields here is.
Yeah, let me pop up. I got a TLT chart here. Let me see what we got here. Yeah, man, this thing has just been sideways.
Whole thing. Yeah, whole thing, if you have a flat line over 109 and some type of uptrend from the lows, it's looks like an ascending triangle, but it's also on the verge of breaking down again. Or I don't know.
Well, if I'm looking at this, I mean, it's got kind of this weird little count going here. So I've got this kind of as a 1 up here at the top and a 2 completed, working up. But again, it continues to consolidate here. Let me see here. Yeah, I think I like that better than a triangle, just because of the way it counts over here since March. So I kind of like the idea of a 1-2 better here, and then
then we're going high. We're going to 116 or so.
Yeah, I mean that's my next target up, but we need a breakout here. We got to get a breakout of this 109 area. Until that happens, again, it's just been going.
Maybe sideways. That happens on risk off.
Yeah.
After the dollar bottom.
That could align again, with everything with the dollar and whatnot, right? So if we check out the weekly, we're still below that weekly pivot there, and we're kind of just messing around this high volume node, but we are catching wicks. So it does look like there's a good chance we could pop on up there. And
you have wave 4 above 120, so it could actually go there. Wave 4 of lesser degree. Yeah, exactly. If we're looking, if we're doing that as an A down instead of a 1, I'm not sure honestly which one that is yet, but if we're looking at that would be my first target, would be that 120 kind of area up there. And so what this could end up being is basically this could be a triangle, is maybe like a wave B. So you'd have an A instead of a 1. Wave B is a triangle, and then wave C heading up there to that wave 4. Or this is actually the larger wave 4 up here at 154.5, which would be crazy. Because Elliott Wave International, whatever Prechter's group, is looking for a break to the downside to take out what you have labeled as 1. But a lot of people like to fade those guys. So
and really, honestly, we're just sideways. I mean, we're sideways. Since that November area, where we got that for Bitcoin, where we got that terminal shakeout kind of thing, and so we really just need to see what's going on here. I'll be honest with you, when I look at this, if I'm looking at downside, what gives me the idea we might go to the downside is this volume that came out here this week of March 13th. You can see that we have this rally up to the top of this range here.
That must have been SVB news.
Yeah. We have this huge bit of volume coming in. And so when you're range bound, especially when you've already been range bound for months, the last thing you want to see is a huge spike of volume coming in at the top. So that is the one thing
that smacks of distribution. That smacks of distribution.
Yeah, because we've already up and down a few times, and we've been going, sideways for months, and now it's still doing it, and that's concerning. Yeah.
Okay, interesting. You want to wrap it? You want to wrap it with WTI? That has shaken both bulls and bears out. It shook the bears out with the OPEC deal, gapping up, and then it shook the bulls out by taking out the lows afterwards, and now we're reversing yet again.
Yeah, I mean, we have this bullish swing failure pattern down here last week, and I mean that even goes down, I believe, into the daily. Yeah, even into the daily. So I posted there, on Twitter. I was like, this looks like a great reversal potential happening here. We'll see how the day turns out, and then we've just had follow through. We've got a ton of room still in RSI and Stoke RSI to continue going up. Daily pivot sits up here right around 78, so I see no reason to at least get there. But this may be potentially a double bottom on here. So if we're breaking out above that swing high there at around 83.44, then the pattern target ends up being up here around 109.
Okay, and that's really contrary to what most people Ellioticians are saying.
This
is still looking for
so
lower.
this, again, we have to break out there to get that. Then we still have the weekly pivot there. So there are some things to watch along the way. But I think things get interesting if we do break out through that weekly pivot with a large candle spread, so a large candle body, large spike of volume. If we can do that and break out above the weekly pivot like that, then I think you really start looking seriously at maybe a new high coming in.
Christopher Inks, sharpshooter from Texas. Fade them at your own peril. That's what I say. So Chris, best way for people to follow your excellent work.
So we're all over social media, but I'm still trying to build that out. Really, you can get us, follow me at TX West Capital on Twitter, and then at Texas West Capital on YouTube. Two biggest ways to get us, or you can go to texaswestcapital.com as well.
Texas West Capital, being protected by the sheriff, Christopher Inks. Anyway, buddy, really appreciate your looks, and always thought-provoking for me, and at times, many times, you've helped reinforce a narrative that I've been looking at, gives me even more conviction. So thank you for sharing.
I appreciate it.
All right, everyone, follow Chris at Texas TX West Capital and check his work out. I look forward to talking to Chris every time. So I'll talk to you in about 3 months or so, bro.
Yeah, we'll see how this all happens, right?
Yeah, we will. It's amazing how these 3-month these cycles fly. It seems like a long time, and then all of a sudden here we are talking again. So,
That's right.
Anyway, good hunting. Have a great spring and beginning of summer trading season, Chris. Appreciate you being part of, help edifying our community here.
Well, it's always a good time being on here, Dale. Thank you so much.
All right, Christopher Inks, everybody. People are thanking you, buddy. And you could join the team in 18 minutes. See, thanks, Chris. Thanks, Coach. Amazing. Nice. So and you could join the team in 18 minutes on the Morning Edge, everyone. See everyone for Turnaround Tuesday. Don't just count your pips, count your blessings. Adios. See you, Chris.